Hello friends, today we are going to talk on the Bank Nationalization Day. 19th July every year is celebrated as Bank Nationalization Day, and the year 2026 marks the 57th Bank Nationalization Day. Looking back at the significant contribution of public sector banks, which are actually the nationalized banks because the government owns majority of stake in these banks. We have done in the post-nationalization era lot of financial inclusion efforts to connect with the masses, and it is equally critical in realizing the vision of Viksit Bharat, which we have by 2047, which aims to transform the domestic economy into the league of developed economies. A recap of the transition of PSBs will be very interesting at this point of time. Beginning with let us go into the history of the banking system a little about, so that we understand what is the rationale of financial inclusion. Beginning with the formation of the Bank of Bengal in 1806, the Bank of Bombay in 1840, and Bank of Madras 1843. These were known as presidential banks in those days, which were merged into Imperial Bank of India in 1921. It served as both a commercial bank and a central bank until the Reserve Bank of India was established in 1935. Subsequently, after the independence, the State Bank of India Act was passed in 1955 to convert the Imperial Bank of India into State Bank of India, laying the foundation for state-owned banks in India. In the meantime, during the Swadeshi movement, many private banks were formed by visionaries of yesteryears. Some of them survived to fund industrial giants, and when efforts to ensure an equitable flow of institutional credit to underserved segments in the hinterland failed, then it was decided to nationalize the banks. It was a historic decision. 14 major commercial banks were nationalized by an ordinance on 19th of July. Another set of 6 commercial banks were nationalized in April 1980, forming a strong network of 27 public sector banks, including the State Bank of India and its associate banks. In July 1969, the banking system was very small, with just 8,187 bank branches with deposits of about 4,684 crore and credit of 3,600 crores. Very small. Nowadays, even a bank branch, a big branch can have this much of deposits and advances. But at that time, the banking system itself was having that kind of a business volume. Only 17% of bank branches were in the rural and semi-urban areas at that point of time, and it inhibited the flow of credit to the hinterland. In line with the spirit of nationalization, RBI shifted its urban-centric branch expansion policy to aggressive branch expansion. The concept of priority sector lending was institutionalized in 1972. It was enhanced in 1974, where 40% of the bank loans should flow to the priority sector. The focus on the flow of credit was to rural and semi-urban. Then lead bank scheme was introduced, service area approach was adopted, and SLBCs were formed, that is State Level Bankers Committee, where the state will monitor the flow of credit to the rural sectors. Then in 1975, regional rural banks were formed to ensure that the last mile connect is established with the masses in villages. The banking sector grew very rapidly between 1969 and we can say 91-92, before the just reforms. Between 1969 and 1992, the banking system grew to 60,600 branches in March 1992, with 58% from 17% to 58% in rural and semi-urban areas. That is, the branch network was opened in those areas. And corresponding growth in deposits reached 2.3 trillion, that is deposits, and 1.25 trillion of advances. Then came the bank reforms. The bank reforms were started, and bank reforms in 1991 brought a sea change in the banking operations from socio-economic transformation to focus on commercial viability of the banking system and emphasis on the control of non-performing loans and increase in the profitability of the banks. Bank reforms set the stage for implementation of 1991 Narasimham Committee reforms, which marked the true liberalization of banking, shifting the RBI's role from a rigid administrative allocator of branches and credit to prudential supervision and granting banks operational autonomy to open branches based on commercial viability. When PSBs were calibrating internal operation structure to balance bank reforms with continued thrust on socio-economic transformation by integrating interoperable technology, when core banking system was introduced in the banking system to provide anywhere, anytime banking to compete with the new generation banks which have entered the banking sector in 92-93 onwards. PSBs had to undergo an intense phase of consolidation, reducing their number from 27 in 2017 to just 12 PSBs by March 2021 to achieve economies of scale and enhance operational efficiency. Now, this saga of growth of nationalized bank is a very challenging road map which the banks have traversed. From nationalization to socio-economic transformation along with profitability and control of non-performing loans, and then consolidation. These are all some of the implementation of the prudential norms, that is IRAC norms, income recognition, asset classification, provisioning, capital adequacy. These norms, Basel 1, Basel 2 and Basel 3 now in progress. Now even Basel 4 is going to be implemented from April 2027. That is known in India as Basel Committee 3.1, which is now RBI has given guidelines on that, how to implement that, and it is beginning on 1st April 2027. So despite the entry of new generation banks, differentiated banks, stronger RRBs and NBFCs, PSBs continued to hold 59% of banking assets, 58.5% of deposits and 54.5% of advances, and out of 160,000 bank branches, PSBs hold 62% of bank branches, and their share in rural and semi-urban bank branches are about 72%. That affirms the stress of public sector banks, that is nationalized banks, on the socio-economic transformation of the society. And the digital public infrastructure, that is Aadhaar and all voter ID, Aadhaar and centralized KYC system, all these have helped the banks to implement through the network of JAM Trinity. So if you look at the participation of nationalized banks in transforming the lives and livelihood of masses, you will find that massive contribution of nationalized banks can be seen. Nationalization of banks might be a good move, but kudos to the PSBs for meeting intended objectives both in letter and spirit, alleviating poverty at the bottom of the pyramid, and PSBs are thus well poised to potentially become effective economic change agents to realize the goals set under Viksit Bharat. So, kudos to the nationalized banks, that is the public sector banks. They have done massive job so far in 57 years, and we look forward for more contribution as we get into the mode of gearing up to implement the vision of Viksit Bharat, that is moving towards a stage of developed economy. So we'll be talking more about these kind of developments. In the meantime, if you have any suggestions, please put it in the comment box and let me know so that we can take up those subjects which are of interest to the viewers, and we can be together in the journey of disseminating knowledge in the areas of banking and finance. So see you in the next. In the meantime, I repeat my request that please share these videos with your friends, with your colleagues, and to the students, and subscribe if you haven't subscribed to this channel, and see that we are in a position to learn together as we go together. Thank you so much.